It's time for the business news now with Emma Hatton. Emma, the country's biggest property company, well, it's reporting a bit of a hard knock to its bottom line. I'm assuming this is all because of COVID-19?
Yes, kia ora, Lisa. Not much that we do around here that isn't related to COVID-19 at the moment. So we're talking about Kiwi Property Group, and it released its full year results today. So like you say, this is the country's biggest property company. Its portfolio is worth around $3 billion, and it owns a whole range of property. It's got retail, office, industrial. It owns Sylvia Park, the big shopping mall in Auckland. So that company has reported a loss of $186.7 million. And that's because it had to write down how much its assets were worth. So it had to cut the value of its property holdings by $290 million. So while it made a loss there on its bottom line because of that, its revenue was actually up and occupancy was high. So it was only because of that write-down, which they're attributing to COVID-19, that happened. The company also is saying that during the first quarter of this financial year, it's also deferred about $20 million worth of rent payments. So that's money owing by its tenants because it wants to keep its tenants. So it's hoping that some of that cost, which it is losing this quarter, will be offset because of the tax changes for the depreciation for commercial buildings. So it's hoping that it will offset some of that. But obviously, it's just they want to hold on to those tenants, so they're willing to wait it out there. And I mean, despite the challenges that this company is having, it seems to remain optimistic. And so it's, for instance, it's saying it will carry on with the planned expansion of its Sylvia Park retail and office complex.
OK, so let's turn now to New Zealanders' financial resilience and wellbeing. There's a new survey that shows it's taken a bit of a knock as well, again due to COVID-19.
Yeah, so, I mean, this is a survey done by the Financial Services Council, and it's the first of a series that the council plans on doing, and it's to track how Kiwis feel on sort of various financial indicators, and it creates this index about how people are feeling and what their financial well-being's like. And why this survey is really interesting is it shows the speed, I guess, at which COVID-19 really became quite real for New Zealanders. So it basically pinpoints that trajectory where it became more than just this, distant international problem and the moment that it kind of reached our shores. So in March 15, 15% of people felt that COVID-19 was impacting on our job security. And by late April, that jumped to half, so massive jump there. So you can see, the moment that it obviously was very real for New Zealand. And the survey also found it changed how risky our investments were, what our risk appetite was like, and that was shown through a 20% jump in people looking for low-risk investments. So that's going from March to April. Obviously a lot more people looking for less risky investments, and we saw a lot of outcry at the time when people realised their KiwiSaver balances were dropping and things like that. And on that note, the survey also found more than 50% of people don't feel like they're on track for retirement. Also really stark from the survey is more than 40% of us now worry about money at least once a week, and that's having an impact on people's mental health. So this survey will be done again to track those various indicators and, the changes from month to month. And the council hopes that it can be used to sort of help drive conversation, use it as data around how New Zealand can build better financial resilience and capability and overall well-being for people as we work our way through this crisis.
OK, well, should we take a quick spin around the markets before you head off?
Yes, so the NZX Top 50 Index rose, closing the day up 1.1%, 113 points to 10,776. The New Zealand dollar, a little unchanged, a little change there at a touch under 61 US cents, 93.3 Australian and 50.1 British pence.
Thank you, Emma. That is Emma Hatton with our business news.